So we are going live now. Hari Om. A very good morning to one and all joined here. I welcome you all for the 16th edition of our Chinarts webinar series on the topic GST, the new face of indirect tax system in India by Dr. Shachindran V, Head, PG Department of Commerce, GSM Government College, Manjeshwaram. Today's session is organized by the PG Department of Commerce and Management in association with the IQAC. Let me now invite Ms. Ramya to deliver the welcome address.
Thank you, ma'am. Hari Om, a very fine good morning to one and all. It's a true pleasure for me to welcome each one of you to this webinar organized by the PG Department of Commerce and Management in association with the IQAC. To begin with, I would like to take this opportunity to wholeheartedly welcome our Honorable Principal, Dr. K.V. Surendran Sir, who has graciously agreed to preside over the function. I welcome you, sir, and thank you for your constant support and motivation.
Thank you, Ms. Ramya.
Let me also take the privilege of extending a very warm welcome to the resource person of the day, Dr. Shachindran V, Head and Assistant Professor, Postgraduate Department of Commerce, GPM Government College, Manjeshwaram, who has very kindly consented to be the resource person of the day in spite of his busy schedule. I welcome you, sir. I also extend my heartfelt welcome to Ms. Anita Haridas, Head of the Department of Computer Applications and IQAC Coordinator, who is hosting this webinar and providing us with all the support. I welcome you, ma'am. Finally, I wholeheartedly welcome all my dear colleagues, my dear students, and all other participants of this webinar. Today's topic for the webinar, GST, the new face of indirect tax system in India, will throw light on the goods and service tax, which is the tax that is levied by the government to replace many indirect taxes. The goods and service tax system came into India from 1st July 2017. The implementation of this tax system has been one of the most monumental economic reforms in India. This one nation, one tax reform subsumed most of the indirect taxes levied at the center and state levels and brought about uniformity in terms of tax administration. GST is a comprehensive, multi-stage, destination-based tax that is levied on every value addition. I'm sure this webinar is surely to be a highly beneficial to all. About, ma'am, can you hear me?
Yeah, I can hear you, Ramya.
About the resource person of the day, today we have with us a well-versed and an eminent personality, Dr. Shachindran B. His qualifications include MCom, MA Economics, FTP, JNU New Delhi, PGDTM, MPhil and PhD. He has 15 years of teaching experience at UG and PG level. He is the research guide in commerce in Kannur University and a member of the Board of Studies PG of Kannur University. He is presently working as Head and Assistant Professor of Commerce of Postgraduate Department of Commerce, GPM Government College, Manjeshwaram. Some of his merits include: he was a gold medalist in MCom with distinction. He was the member of Indian Commerce Association and Indian Accounting Association. He served as a resource person for seminars, workshops, and UGC NET Kerala PSC examination related training in commerce. He contributed articles to books including those of Entrepreneurship Development Institute of India, Gujarat. He is a regular author of articles in Vyavasaya Kerala magazine of Industries Department, Government of Kerala, and Yojana, Government of India. He has recently published one book on GST. He has served as chairman, Board of Examiners of MCOM of Kannur University. He has presented papers in more than 30 seminars and has published 15 articles in various national and international journals. We are really very happy to have you with us, sir. Thank you. And once again, I welcome you all to this webinar. Thank you.
Thank you, Ramya. Let me now invite our principal, Dr. K.V. Surendran, sir, to address the participants.
Hari Om, a very good morning to all the participants. Our esteemed speaker of this morning, Dr. Shachindran V, who is heading the Postgraduate Department of Commerce, Govindapai Memorial Government College, Manjeshwaram, Ms. M.K. Ramya, the head of the Department of the Postgraduate Department of Commerce, Chinmaya Arts and Science College for Women, Kannur. Ms. Anita Haridas, who is hosting this webinar, my other colleagues and dear students. In fact, I am very happy that we have yet another edition of our webinar series. And this time, a very eminent person. And I'm afraid in our display, there's a mistake. It is a GPM Government College, not a GSM. Govindapai Memorial Government College, Manjeshwaram. And the pandemic, of course, has created a panic across the world. But from a positive angle, I will say that the pandemic time is a celebration time for the serious academicians, teachers, of course, academicians include teachers as well, scholars and students across the globe. The virtual platforms are busy, as I see it, almost day and night, depending on the country in which you are. In fact, recently I have heard scholars speaking as early as at 4 a.m., giving erudite lectures. So it's a big relief because scholars across the world, even internationally renowned scholars are at our fingertips now. So that the only point is that how effectively we are making use of such opportunities. That is the critical question that we should be facing. And of course, today we have, as has already been said here, a lecture on GST. And as I look at it, I think it is directly relevant to more than 130 crore of our population in the country. And a very controversial proposal it used to be. And it was in fact proposed when Atal Bihari Vajpayee was the Prime Minister of the country in 1999. And of course, it came into effect, as all of us know, on 1st July 2017. And that again, it marked a historic midnight. The launch of the bill was, marked by heated debate, which lasted even after the midnight of 30th June. It went, it was the small hours of 1st July. And as everyone knows, the regulations are governed by the council, GST council, where everyone has a say. That is everyone in the sense, all the finance ministers of the different states, plus the finance minister of the central government. And as Ramya has rightly pointed out, it is collected from a point of consumption and probably not a point of origin like the previous taxes and all kinds of slabs we have. And the debating question is why petroleum products are not included, and even alcoholic drinks are not included in this proposal, that is goods and services tax. Of course, I'm not the authority to speak on this, but I'm just trying to point out that it's a very relevant and very important topic as far as the students and the teachers of economics, commerce, and management. Of course, everyone else are concerned. So definitely, we are going to have a very important session and very lively debate. And I believe that it will be an opportunity for our students to raise, critical queries as to what it all means, and whatever advantages or disadvantages it has. Of course, these are days, like one India, one tax, and one India or one country, and one election, and one country, one ration card, and so on. So from that point of view, again, it's in some sense a unifying factor as we would like to look at it. Anyway, I take the opportunity to congratulate the Department of the Postgraduate Department of Commerce and Management for the initiative, and of course the head of the department of Computer Applications, Ms. Anita Haridas, and all my colleagues in the department and in the institution, and of course my dear students who are participating in this program. And it is streamed live on the YouTube as well, and so maybe several others are participating from probably across the country. And I extend a personal welcome to the speaker of the day and to all the participants who have found it useful to attend a session probably which will last for 1 hour or 1.5 hours. Thank you very much.
Thank you, sir. On behalf of Chinmaya Arts and Science College for Women, I once again welcome our resource person, Dr. Shachindran, and I invite him to begin the session. Sir, over to you.
Okay. Okay. Am I audible?
Yes, sir.
Okay. I'll increase my sound. Respected President of this function, coordinator, other members of organizing committee, dear participants, good morning all of you, pranamam. First of all, I thank Remy teacher for this invitation. Recently, I had published a book on GST, so that may be the reason why teacher chosen me as the resource person for the program. I'm so happy about that, because this is the third occasion where in a seminar I'm speaking as a resource person for GST. The other two were national seminars conducted in last 2 years. So I'm happy to interact for the first time with the great institution, Chinmaya Arts and Science College for Women at Kannur. So this topic has immense importance in the contemporary period, because recently we introduced GST into the post-graduation syllabus. And in the next syllabus revision, it was expected to come in the last year, but definitely will come in the coming years, will have, or is likely to have, GST as a full paper, considering its importance, job potential, etc., etc. So from those perspectives, and also this topic has immense importance with the practical world, whether you are doing a business or service sector or anything for that matter, it has got immense importance. So definitely GST is a very important topic that each and every one of you should consider as an area of interest and area for expertise. Sooner, an English book also on GST will be published. It's almost finishing stage, so you can expect that. Now, let me convey how I'm going to utilize my time over the next 1.5 hours or 2 hours. The ma'am was saying that I can take my own time. So this is the track of my presentation. I'll start with saying the pre-GST indirect tax system in India. How was India's indirect tax system prior to 2017? Secondly, we will take what GST is. Though it is almost 3 years over since its start in India, still it is considered as a new concept or new area for many, especially among students. So I will be quickly looking upon what GST is. Then evolution of GST in India, how it came up. Then types of taxes under GST, the dual GST concept, and how major items are considered. Then features of GST, that will be the major part of my presentation, the rates, council, network, GST, Suvidha providers, etc., etc., etc. Major and highlighting features of this law will be explained in those segments. Thereafter, I have given, considering the post-graduation syllabus that we are having at present, I have put some items for a further explanation, such as registration, input tax credit, supply, valuation, and TDS. Of course, TCS also is there in addition. So they are given a little more importance to a minute cover. If time is not permitting, I may be skipping some of them because they are detailed study of some aspects of GST. Then trends in GST collection. It is from a research point of view, because I am a researcher and a research guide, so we'll be looking topics from research point of view also. The trends in GST collection at the national level and at the state level. Then merits. What are the overall merits that it is expected to bring over a period? Because GST is a taxation system where benefits we can really feel only over a period, maybe over a decade or so. So what are the merits we are expecting at least over a period? Then criticism and some suggestions. That's how I'm going to utilize my next 1.5 hours. Now it is 10:50 in my mobile phone, so maybe taking 11:50, 12:30 or so maximum. So may I begin? Okay, Remy teacher, okay? Is it
Yes, sir. Yes, sir. You can begin.
Okay, thank you. Now let us start with a simple question. What are taxes? Taxes are charges. We classify broadly into two types, direct tax and indirect tax. What is a direct tax? A direct tax is a tax which is collected directly from the persons on whom it is imposed. For example, income tax. A salary earner who earns income is charged the income tax. He is paying it, he bears the ultimate burden of payment, ultimate liability. So the incidence and levy on the same person, that is what we call as direct, directly on the person who pays it. But an indirect tax comes in a different way, where the government is receiving the amount of tax from an intermediary. The incidence is on one person, but the payment levy is on the other person. For example, earlier customs duty, the incidence of tax is on the manufacturer. The manufacturer of excisable goods in India was bound to pay central excise duty as per Central Excise Act 1944 and Central Excise Tariff Act 1985. But this tax amount is added with the product cost and finally the product price. And the consumer who is paying price for the product is paying an amount of tax also, the excise duty also. So that means though the excise duty is levied on the manufacturer of excisable goods, it is ultimately on the person who actually purchases or buys those goods. So indirectly, government is collecting from the consumer through these intermediaries. They may be service providers, they may be manufacturers, they may be sellers. These are intermediaries. So from them, government is collecting indirectly. Look at the Union Budget 2020 report and Finance Commission reports over the period. It says that 65% of India's overall tax revenue is constituted by indirect taxes. 65% of the total tax revenue is from indirect. That is the dominance of indirect taxes on India's exchequer. So it assumes very significance. We cannot neglect it. We cannot give lesser importance. So we are much concerned about how this whole bandwagon of indirect tax system in India can be improved, how it can be revamped, how its efficiency can be improved, and so on. Direct taxes are constituting this corporate tax and income tax constituting only 35% of tax revenue. That's what the latest reports are saying. So at the outset, I am proving that the indirect taxes are very, very significant for Indian economy. The economy which we are planning to become $5 trillion over 2024-25. So we are concerned about that. Now look how the powers of government is coming with regard to taxation. It is from Constitution of India. There are important articles in Constitution which empowers the government to frame laws, rules for levying taxes. Look at some of them. Article 265 talks about that no tax shall be levied or collected except by the authority of law. That means whether the parliament to make the law for taxation or state legislature to make the law for taxation, there must be constitutional approval or constitutional permission. That is why we have 7th schedule in the Constitution which talks about the items on which the parliament or legislature can levy taxes. So prior to 2017, the earlier system of indirect taxes in India, we maintained the 3 lists. Now also that lists are there, but with some changes. List 1, list 2, list 3. Union list, state list, concurrent list. Article 246 of the Constitution empowers the governments to make laws, tax laws, for the items which are given in the list 1, list 2, list 3. In which list 1 is the power of central government, list 2 for state government, and list 3 for concurrent power. Concurrent power means state government or central government may make laws, tax laws. But if there is inconsistency between state and central laws, Article 254 empowers the parliament to take final decision if there is inconsistency. So this is how Constitution is playing a very important role in the levy and administration, charging, etc. of taxes in India. So that means if there is no authority from the Constitution, you cannot levy a tax. And that is why when GST was introduced, we had to have a constitutional amendment, 101 amendment for permitting the government to charge a pan-India indirect tax by replacing all other existing taxes, indirect taxes. So that is the significance of the constitutional amendment. Now, how was the pre-GST indirect tax system? in India. Look at the major constituents of pre-GST indirect tax structure. The first one, the earliest of earliest, the excise duty, central excise duty. It was levied based on Central Excise Act 1944 and Central Excise Tariff Act 1985. In fact, when I was studying MCOM, we had this as a content for post-graduation. So it's a very important law which is telling that if an excisable goods is manufactured in India, before leaving the factory gate, the duty must have paid. The excise duty must have paid. It is permitted by the 7th schedule of the Constitution. Entry number 84, list 1, union list. There, the taxable event was manufacture. When you manufacture, you must pay it. You must pay central excise duty. Not only central excise, basic excise duty, additional duties are also there. That's all you have to pay. Then comes the second important one, customs duty. When you are doing international trade, import and export. It is based on the Customs Act 1962 and 1975 Customs Tariff Act. In the Constitution, it is permitted by entry number 83, list 1, union list. And their taxable event was export and import. When a commodity crosses the customs frontier of the country, if it is export duty, import duty must have levied, then only you can clear it and take out or into India. Then at the state level, we have sales tax. The erstwhile 1963 Kerala general sales tax for Kerala. Later in 2005, we launched the historic value-added tax after hefty protests, etc., from the traders and dealers. And with regard to the interstate trade or commerce, we have central sales tax. And CST was levied based on CST Act 1956. That came as a result of, as far as VAT is concerned, that is from the state list, entry number 54 of the 7th schedule. And CST is based on 92A, list 1 of the 7th schedule. The taxable event in both cases, whether it is CST or VAT, is same. When you sell something, you have to pay duty, means that particular levy. So a consumer is paying it. So the seller, when selling it, must pay to the government, and that levy is recovered from the consumer. That is how it was working. And another one, Finance Act 1994 introduced service tax after Raja Challaya Committee report in 1991. By 1994, we launched the service tax. Residual entry by entry number 97, list 1, that is again from the union list of the 7th schedule, we got service tax. So the taxable event for that service tax was provisional service, hotel service, restaurant, travel, tour, etc., etc. Any number of services are there. But interestingly, when the Finance Act 1994 was there, the number of services covered in the ambit of taxation was lesser as compared to what we have now in GST. Okay. Now another one, in local self-government charging entry tax based on 1994 law, entertainment tax based on 1961 law, again from the state list, entry number 52 and 62 respectively. There the taxable event is entertainment and entry of goods into a particular region or a territorial area, etc. Now this is a summary. The central government is levying tax on the manufactured goods except alcohol for human consumption, opium, narcotics, etc. That is with the state government. Services, central alone can levy tax. Interstate tax levied by center, collected and retained by states. That earlier central sales tax. And state taxes levy on the sale of goods with the help of VAT. Now this is the background. Now the question, again, just a pictorial representation. These are central levies, excise, customs, GST, etc. These are state levies. Now, having said these many taxes, what are the problems that persisted in the pre-GST scenario, which actually paved the way for GST implementation in India? The first one was tax cascading. For example, I can tell you, I told you when you are manufacturing a commodity, a goods which are excisable, you are bound to pay excise duty to government. Take an example. Suppose you are manufacturing goods worth rupees 100. The excise duty, take it as 10%. Your the price at your level, factory level, is 110 rupees. And this commodity, when goes out, this 110 will be the price. At the next stage, take it as a direct sale to a customer. You are charging VAT. VAT, take it as 10% as a VAT percentage. VAT is calculated on the 110, not on 100. The value that you have, the value that you have contributed, it is 100 plus 10, 110. So the tax will be 11 rupees instead of 10 rupees. So that means tax is levied on tax. So that will definitely lead to increased price. So as the good passes through the different stages, different hands of supply chain, where from the manufacturer to wholesaler to distributor, retailer, sub-agent, etc., the taxes are getting added up. A simple example, iron ore mining team, when they are selling the mined iron ore to steel manufacturing company, they are adding taxes. Then steel manufacturing company, where their finished products are sold to car engine makers, again taxes are added up. When they are selling into car makers, that's again added up to the cost. The tax is again added up on the tax. And as over a period of the supply chain or the production cycle or production chain, the price will escalate just like that. Definitely, increase in the price just due to tax factor is fueling the inflation. Inflation is not very good for an economy to grow or develop. So that's issue number one of pre-GST tax system. Issue number two, since your prices are very high in Indian market, Indian economy, when you take it to international economy or international market, you are compelled to sell at a very high price because you already had paid taxes to government. All these taxes should be recovered from the consumers or buyers. So definitely you can sell only at that higher price to international consumer also. But in those countries which were practicing GST or that such a simplified VAT system, will be having lesser taxes, so lesser prices. So you cannot compete in the international market. That will definitely affect the foreign inflows, foreign exchange inflows. So that after second issue is that affected competitiveness of products in the domestic and international markets. Why domestic market? From now after 1991 economic reforms, privatization, globalization, and liberalization, we are no longer an Indian economy. We are a part of global economy. We are part of global economy. Anybody can come and do business here. We have WTO. WTO is permitting cross-border transactions. So no longer you may be using a domestic phone only. You may be using Samsung or any international company, Chinese company or a US company. Apple you are using, Apple laptops you are using. They are all international products. So when those international companies are, their products are coming to Indian market with less taxed prices, definitely they will be better in terms of customers' viewpoint with regard to the price they are paying, as compared to the high taxed, high priced Indian commodity. Otherwise also people are having a passion, a flavor for international foreign products. Then what will happen if the price also lower for them? So definitely Indian business, Indian economy will struggle. Another issue, tax pyramiding. Tax is becoming part of cost. So for example, earlier, say for example, you are paying a price MRP rupees 100. There you may be finding a tax is say 10 rupees. Only that VAT you are knowing at that time. You actually paying price for the excise duty the company had paid, other levies company had paid, the share of service tax, if anything charged on the company, everything was added to the price. But you are not knowing that. You are not knowing which is cost, which is price. So tax is becoming part of cost. Cannot segregate. Then dearer cost of living. See, many taxes definitely means many charges, many payments, or adding auto tax. Look at some data. Reports are saying that 25 to 30% of the prices is for taxes. Okay, or the price, it's not for the cost, it's for prices, the tax portion. Then tax difference across the states. See, we are a single economy. We are by constitution, the 29 states and 7 UTs are under single constitution. We are supposed to be one country, united country, right? But the 29 states will have 29 tax laws, 29 VAT laws, 29 individual laws. We are talking about pan-India operations, across the country operations. We are talking about mass scale operations. How we can think about those mass scale when 29 states are having 29 tax laws? Because we are supposed to comply with each and every tax law. Tax laws are not just for seeing or enjoying; they are to be complied with. They have to be given due care so that you are a responsible citizen as a business entity or a registered dealer. So tax differences, for example, if you manufacture a product here or that in Tamil Nadu, you may find better rate in Tamil Nadu as compared to here. So definitely you will go there. What will happen? Industrialization will be clustered around some states, some districts, some places. That's what happened over the 50, 60 years of India's independence. Clustered around. In fact, my doctoral level research was on regional differences in entrepreneurship. There, my main concern was there is regional disparity in economic development. One reason why regional disparity is there, my study was on Kerala focus, but I have a good number of examples across the country also. Hyderabad versus rest of Andhra, Bangalore versus rest of Karnataka, Mumbai versus rest of Maharashtra. Good number of examples are there. The industrialization clustered around certain areas. It's not an Indian phenomenon alone. It's a case of some other, good number of other countries also. One reason why industrialization is clustering around is the differences in taxation, at least the way in which they are being given care or treatment. So tax differences is another concern. We cannot call it as one India. We can call only as a different states. We call it as an India. That was a state. That unity is lacking in the tax laws. Multiple tax administration. If you are bound by excise law, you have to bound by the central excise laws. If you are bound by service tax law, you have to comply with all the requirements of service tax law. Remember, comply with the tax law is not a simple, easy matter. You have to have a good set of documents, records, vouchers, regular filing of returns, tax payment, annual return, quarterly return, monthly return. Audit of it, if necessary, audit is needed. There may be some mistakes, some intentional or unintentional mistakes, cases coming. You are supposed to have a legal battle, which may span over several years. The whole story is gone. And if it is many tax laws and many cases, many issues, the management exception principle is gone altogether. You will be behind the cases rather than behind the business. So multiple tax administration is a very difficult and hectic affair. Not only for these complying parties, for the government too. Government is having different administrative mechanisms with a good number of bureaucrats and officials just for maintaining and complying, ensuring that the laws are being implemented or enforced in due course of time and in proper manner. So that is almost a duplication of works. The tough tax complaint, I told you, multiple regulations. And tax evasion, the hot story of our time. In 2017-18, 48,500 crore was the tax evasion that we had in India based on authentic reports. Now, having said the problems that we are facing, we are having prior to GST, now comes GST. It is from this background we have to understand why we need a unified one India, one tax for indirect taxes. What is GST? GST is a tax levied on the supply of goods and services. I'll give a simple example. Suppose you are giving a commodity, you are selling a commodity. Okay, we call it as the taxable event as called as supply. Supply means delivery, that's all. Okay, you are selling somebody something, or you are rendering a service to somebody. That is called a supply. So it may be supply of goods or supply of services. While doing that supply, a tax is levied, and that tax is called GST. Simple as that. It's an indirect tax. It's a consumption tax, consumption-based tax. What is the consumption or destination-based tax? The tax goes to the state where it is consumed, the bill address of the commodity. And it is a tax on value addition, the concept that we have drawn from the VAT law. What is that value addition? So for example, I will give that simple example that I told earlier. The iron ore manufacturer, the farmer, the starting level person, suppose manufactures to the extent of goods worth rupees 100, iron ore worth rupees 100. and he gives to a steel manufacturer, okay, steel manufacturer, and he adds 50 rupees worth to the raw material. The value at his level is 150, and GST is levied on the value added by him. At each stage of supply chain, if value addition is there, on that only tax is to be paid, or tax is levied, tax is charged. So how do we ascertain numerically or quantitatively? It's very simple. You know, simple formula for sales. We compute sales by purchases, whatever raw materials and other input that we purchase for the manufacturing a product or rendering a service, plus expense incurred by the seller. Okay, this will be the total cost. Raw material already purchased, plus expense you are incurring as a seller, plus profit of seller. That is the sale price, normally sale price. Now here value added means the expense incurred by seller plus profit of seller. That's expense incurred. So that means sales minus purchase will give you the value addition. Or GST is payable only on that value addition. That means, for example, output to value is 150. Output to, in this case, iron ore steel manufacturer. Iron ore steel miner sold at rupees 100 to steel manufacturer. And steel manufacturer adding value at rupees 50. So total value becomes 150. So tax will become, GST will be computed on 150, but tax needed to pay only on this 50. How? The tax already paid on the 100 rupees, the earlier value addition is deducted. That's the formula. So GST payable is equal to tax on output minus tax on input. Very simple. So this is called tax on value added. So tax is levied at all stages of supply, from manufacturer up to the final consumer. No one is left behind. At each stage, when you are selling, you will be reporting the sale of purchases of transaction of other dealers. So for example, in the iron ore case, iron ore miner should report his transaction of 100 rupees. The steel company should report his transaction of 150. That means 100 rupees of previous party and 50 of steel maker, 150. Suppose the steel maker is selling to a car engine manufacturer, say for rupees 200. The car engine manufacturer, when selling this car engine to another person, he will be reporting, say for example, 200 is the price at which he is selling, he will be reporting 200 rupees. He will be reporting transaction as at 200 rupees. And also he will be reporting the input that he got at rupees 150. So that means at each stage, his transaction and the earlier transaction also reported. So that you are ensuring that the government is ensuring that all the transactions are getting reported with the government, means the tax department. So none will be left. Why we are compelled to do it? Because we want to get the credit of the taxes already paid on the inputs. That is, later I will call it as input tax credit. The credit of taxes already paid on the inputs that you use for the manufacture of your products. So like that, you are ensuring that. So what you do, you compute tax on 200 rupees. Say, suppose 10% is the rate, you will calculate as 10, 20 rupees. And you will deduct the tax already paid. Already 150 was there, on which 10% if you compute, 15 rupees is tax already paid. So you will report that 200 is my value. I am paying, I am calculating 20 rupees as at my level. Plus that is there. Then input is 150 rupees purchased from X Limited. On that 15 was already paid by X Limited. So my net tax liability only is GST liability is only 5 rupees. So for your transaction is reported, the other transaction also reported. Since the other transaction is reported by you, that X Limited will be compelled to report his transaction. Like that, each and everyone is made self-compliant with the laws. That is how nicely integrating all the stakeholders or the supply chain into the tax network. That's the beauty of GST. Now, credit or taxes paid at the previous stages are given. Whatever input tax on input, what we call it as input tax, credit is given for each subsequent stage. Now, the GK part, France is the first country to implement GST in 1954. So thereafter, about 160 countries around the world implemented it. Now, when GST was launched, 2017, a good number of existing indirect taxes were subsumed or merged or eliminated, for which the GST is applicable. Which are the central excise duty. So at the central government level, central excise duty, duty of excise on the medicinal and toilet preparations, additional duty of excise, additional duty of excise on textiles and textile products, additional duty of customs, CVDs and countervailing duty, special additional duty of customs, service tax, central surcharge, cesses, all gone away. Then state taxes, state value-added tax, central sales tax, electricity tax, energy tax, oh, so many purchase tax, tax on lottery, betting, gambling, state surcharges, all are now no more in existence with regard to the goods and services for which we are having GST. Now, certain items are kept outside the purview of GST, as mentioned by one of the earlier speakers. Certain items, that reasons are good in number. Because when you are charging petroleum, definitely that will affect each and every product or goods or commodity in the economy. The impact of it can be studied only over a period. It's not that easy to understand. You know what will happen when petroleum prices increase. That's affecting each and every. That's why often in the history we used to have several bunds and hartals in the name of petroleum or diesel price hike. The main reason that will have substantial impact on the economy. Since GST is a altogether new indirect tax law and altogether radically transformed law, the government thought to have a time to study how GST is working in India, then to introduce it on the petroleum law. That's the main reason. The alcohol for human consumption, 5 petroleum products, crude oil, diesel, petrol, natural gas, ATF, aviation, rubber fuel, tobacco, etc., are not at present with the under the GST regime. GST Council has the power to decide when they will come under the purview of GST. They are not exempted, they are not eliminated, they are just kept at base. They may be taken into GST regime at any time when the council is deciding. Now, evolution in brief of GST. The 2006 announcement of intention to introduce it by in India, then set up the empowered committee. Say Asindas Premji committee was appointed as the chairperson of empowered committee. Then set up a joint working group to examine the GST. 2009, they are given the first discussion paper by the committee. Then government thought to introduce the 115th amendment bill, but why constitutional amendment bill was needed? But as I told you, it is a tax law which is going to change even the constitutional provisions. So we had to have. In addition, since it is a nationwide law, we have to have a constitutional body to administer or to supervise or monitor the implementation. So we amended the constitution for that also. GST Council to include this levy and collection in the concurrent list, to confer the power to Parliament and state to frame laws. For all this purpose, we had to have a constitutional amendment. Then in 2013, further committees came: dual control, threshold, exemption and GST regime, risk neutral rate for SGST, CGST. These are some of the areas. IGST and GST on import, how to charge imports, etc., were stated by committees. And finally, what happened is GSTN, GST Network, incorporated as a Section 25 company. I will talk about this later. The committee constituted by is empowered committee, given you the first draft law of GST. In 2014, we introduced again 122nd constitutional amendment bill introduced and passed finally as in 2016. And as told by one of the earlier speakers, we in the joint sitting of Parliament, we launched or with effect from 1/7/2017 across India. And in addition, something more happened. A set of laws were enacted in India: CGST Act 2017, SGST Act 2017, UTGST Act, and so many. This is the diagrammatic picture of the journey so far. Look at the task governments took, and there were several executive officers, bureaucrats took for implementing this law. 10 years in making, 30 plus subgroups and committees, 18,000 plus man hours of this is from government reports. 14 easy meetings in 10 years, 175 plus officers meeting. Like that, hefty kind of efforts were undertaken to introduce this law. Now the GST laws, the legal framework of GST in India. As I told you, there are different pieces of taxes in GST. I'll tell you later what they are. For levying these each and every tax, we had to have law. So Central GST Act 2017, which talks about the levying of CGST, Central GST. That is the coverage of 2017. I'll tell you when this is levied and how, etc. later. Then integrated GST, when there is international transactions, then union territory GST for the UTs. Compensation Act. Compensation Act is a very special law which talks about giving compensation to states, for loss of revenue on account of implementation of GST in India. That means, see, hitherto now you have excise law, etc., etc. Now each state was levying tax on VAT. Each state was levying their own taxes. Manufacturing states were getting more taxes. But what will happen when the GST is coming? The manufacturing states may be getting little kind of setbacks, and the consumer states will be getting more taxes, because GST is a consumption-based tax. Where it is consumed, that state government will get more tax revenue. So definitely, manufacturing states were in agitation against the implementation of GST in India. So then government told that if there is any shortfall in the revenue of taxes, indirect taxes, due to the implementation of GST, that will be compensated by the central government. For that, Compensation Act 2007, that's for 5 years only. Okay. Now there are plans to extend this beyond 5 years also, maybe given. That all depends. Then for implementing this act, we have rules also specifying details as to each and every aspect, how it will be managed with. CGST rules 2017, IGST rules, and these are all at the national level. Now states pass their own GST Act. Assam was the first state to pass their state level SGST Act. And in fact, this SGST Act is a copy of a model of CGST Act with the changes in terms. So this is the dual GST that we are having. Look at that. GST is, the supply. The supply we classify broadly into two: intrastate and interstate. Intrastate and interstate. What is intrastate? Within the state. For example, a dealer in Kannur is supplying goods to a dealer in Alappuzha, Trivandrum, or Kozhikode. That is intrastate. When an intrastate supply takes place, you are levying CGST and SGST. For example, when you are supplying, say, goods at the rate of at the rate of 18%, in this 18% GST, which is called as 18% GST, is applicable on this commodity. Of this, 9%, the 50% will be CGST, and the remaining 50% will be SGST. If it is taking place in a UT, union territory, that will go to union territory. So 50% of the tax rate will go to the central government account, and the remaining 50% will go to the state government account. So put together, 18% will be levied on the charged on the consumer. That is the intrastate transaction. Interstate means IGST is levied. If it is 18%, entire 18% will go to IGST, the central government, IGST. Again, in the case of B2C transaction, business to consumer transaction, the state government also will get its due share, the 50% share, state government also will get. That is how the dual GST is working in India. Now, to summarize, the types of taxes under GST, in the whole GST system, which are all the different taxes levied. As I told you, in the case of intrastate supply, means supply within a state from one district to another, one area to another. CGST and SGST. CGST means central GST. SGST means state GST. If it is in a union territory, it is union territory GST. If it is interstate supply, IGST is levied. IGST is nothing but sum of CGST and SGST on that. Okay, as I told you, in the case of B2B, entire amount will go to the central government. If it is state, it will go to, if it is B2C transaction, it will 50% will go to the respective state government. In case of import, another very important transaction, I told you the customs law were dealing with the imports and exports. Okay, the import, IGST plus basic customs duty is levied. Basic customs duty is levied. On exports, and also supply to special economic zones. You know, special economic zone, the areas earmarked for industrial development. So many tax exemptions, tax relaxations are given. We have in Kerala also, we have special economic zones for IT park, etc., smart city or some info park, etc. They are treated as zero rated supply. That means if you are supplying a commodity to a special economic zone, tax GST levy will be 0, nothing to be given. That's all. Exports are also promoted because exports are the only source how you are getting foreign currency, foreign exchange. So they are not to promote them; they are treated as 0 rated. No tax to be GST should need to be given. Then you may ask a question. I will give you that. I will tell you what is that question. Take a simple example. Say you are a car manufacturing company. Okay, you are a car manufacturing company. Say Tata Motors. This company, I'm giving a simple example, not taking values in lakhs and crores. Simple example in thousands. Suppose you are selling, you are purchasing raw material, right? You are purchasing raw material like the tire, components, parts, like glass, etc. You are purchasing components worth rupees 10,000. Okay, 10,000. Simple example I'm telling. On which you are paying 10% GST. So that GST is equal to 1,000 rupees. So that 1,000 is the input tax, right? The tax you pay on input. This input should be given to, input tax should be given to the seller of those components, raw materials. So Tata Motors is giving this 1,000 rupees to seller of those inputs. So your cost is 10,000 plus 1,000, 11,000 you pay to supplier of those components, inputs, raw material, etc. for car manufacturing. Now you, the company, the Tata Motors is selling this with some value addition, etc. for 20,000 rupees, right? 20,000 rupees. I told you in the case of sale in the country, in the same country, right? If it is an intra-state, you will be levied CGST and SGST. Okay, no doubt on that. Interstate, suppose from say one state to another, IGST will be levied. Now, in the case of again, so for example, let me give an example. Suppose Tata Motors in Mumbai showroom or Mumbai shop, it is selling to a party in Thane, means same in Maharashtra. What will be levied? Say 20,000 is the price. Okay, 20,000 is the price. Assume take it as 10% same rate. For simplicity, I'm giving the same rate 10%. The tax, output tax will be 2,000 rupees. Okay, output tax will be 2,000 rupees because 20,000 is the price at which you are selling. So on which 10% will be levied. So 2,000 is the output tax. Now I told you the dealer is eligible for the input tax already paid to the supplier of raw materials that you used for manufacturing. So whatever raw material tax you already paid to the providers of this raw material, we call it as inputs, or tax paid on this is called as input tax, will be given as credit or refund, return. Okay. So you already had paid 1,000 rupees as input tax, right? You already had paid 1,000 rupees as input. So this output tax now it is 2,000 less input tax you already paid to others. Okay, means supplier or raw materials. So remaining 1,000 only need to pay to government when you are supplying to an international country, when you are exporting, or when you are interstate, when you are intrastate. Any case, normal case, normally interstate or intrastate, you are paying only 1,000 rupees to government. That's a simple logic. With regard to export, look at the exports or supply to a special economic zone, they are treated as 0 rated supply. When you are exporting to another foreign country or even in the same country, when you are supplying to a special economic zone or to a developer of a special economic zone, there is no output tax because 0 rated supply. No, this 2,000 will not be there. 2,000 will not be there. But you already had paid 1,000 rupees as input tax. The question is whether you are eligible for getting cash 1,000 rupees to your pocket. The law says yes, you will get it as a refund. You will get it as a refund. So that is called as input tax credit, getting as a refund. Or if you have other tax liability to government in respect of other transactions, other supply, you can set off this input tax credit to those tax liabilities. For example, you had sold some other good vehicles in India itself, on which you have tax liability, say 10,000 rupees. From the 10,000 rupees, the input tax on the exported goods can be credited or eliminated. So otherwise, if you are 100% exporting firm, 100% supplying to special economic zone, whatever input tax you had paid to the suppliers or raw materials, you will get as refund. This is the logic of ITC. Now this is a graphical or the diagrammatic presentation of what's happening in taxes. So it's very simple. Say it's a state. Okay, take it as Kerala state. Within state, when you are operating, that is a symbol. Within state, when you are operating, it is intra-state. CGST plus SGST is levied. Okay. Similarly, state 1, state 2. In the state, you are charging CGST plus SGST. Here also CGST plus. I told you how this is coming. So if 18% is the GST, 9% goes to CGST, remaining 9% goes to SGST. Like that, it is divided 50-50. Now, if it is between states, means from one state to another, IGST is levied. State 2 to union territory, IGST is levied. Now, from foreign territory, an import is coming to union territory. Then again, IGST is levied with basic customs duty. So this is how the taxes are imposed or levied. And this IGST credit can be used for the set-off of IGST tax liability, CGST tax liability, SGST or GST tax liability. Those issues will come later, in which order they can be set off, etc. Now, these are some popular rates. Just for academic purpose I am giving. These rates are changing frequently, so I need not give special emphasis on that. The nil rate is there, nil rate, no tax is levied. You may be remembering when GST was introduced in Kerala in 2017, our Honorable Finance Minister Thomas Isaac was saying chicken is going to be from the 120, 130 per kg to 85-80 rupees per kg. Price is going to come down. Why? Because live animals, meat, etc. are nil rated supply. No tax is to be GST is to be levied. But what happened actually, that is a problem with the GST actually. I will tell you later. People though got exemption from GST taxation, still not passing on those benefits to consumers. We call it as anti-profiteering. Anti-profiteering. That's happening. So anyway, live animals, meat, etc. are left out. No GST is nil rate. They are charging nil rate. Diamond stone, etc. 0.25, 3% is there, 5% is there, 12, 18, 28. The highest rate is 28%. Okay. Now, the next topic is, just a minute. How can I remove this panel? Yeah, it's coming. Is there any way out? Okay, I will. So good. Another very important aspect of GST for a learner is Goods and Service Tax Council, GST Council. It's actually introduced in the included in the syllabus also. Learners, students may be particularly interested in this. And this is one area, one topic that we frequently read in newspapers about GST. The meetings of GST Council and arguments and disputes and so many things. So look at that GST Council. As I told you, in 15th September, under Article 279A, with the help of insertion of Article 217A, we constituted GST Council. What is the GST Council? It is the apex body for taking care of GST law in India. Apex body, they are the final word on GST, imposition, exemption, etc. are finally decided at this body. And this body is a representation of the whole country, They are recommending to union and state governments on GST taxes to be subsumed in GST, exemption, threshold, GST rate, model GST law. How should be the law? It's actually a recommendation from council. We call it GSTC or GST Council. Procedure, special provisions, notification, when to include petroleum, etc. into GST regime. Everything is at the decision of GST Council. They are actually determine the procedures, how it should perform. Because India is a federal country. A federal country means the center and states go in hand with the purpose of the development or implementation of policies, etc., etc. There's a structure. Center at the top is making a decision. So federal setup is also permitting states to have their own say in the decisions and allowing their own views on the decisions. So they are deciding the modalities of dispute resolution. I told you it is involving all the states. GST is a all India tax. So when you are supplying from here to Tamil Nadu and you are coming into contact for dealings. Then you are selling to UT, Union Territory, central government is coming into picture. So definitely there will be state level issues or central and state level issues. In all those, dispute resolution is taken care by GST Council. Now, what is the organization structure? As we all know, the Union Finance Minister is the chairman, Union State Minister for Revenue or Finance, and a minister in charge of finance and taxation of all the states as members. From Kerala, it is Dr. Thomas Isaac sir is representing. The quorum for the meeting, one half of the total, number of members. Okay, 50% is the quorum. Then only a valid decision can be taken. Decisions are to be approved by 3/4 majority, 75% majority of the weighted votes of the members vote in present and voting is needed. There, the central government is having a weightage of 1/3 of the total vote cast, and state governments together 2/3 of the total votes cast. This is how the decisions are taken at the GST Council. Okay. Okay. Now, I told you GST Council is a very, very important constituent of GST regime in India. Another very important constituent is Goods and Service Tax Network. Remember, unlike many of the other taxes, or many of the other erstwhile indirect taxes that we had in India, GST is fully a digital tax system, fully networked. For example, when you are supplying goods from here to Delhi or here to another state, the two states should be in tandem. The state and center should be in network. The suppliers, say for example, when you are purchasing from here, from a supplier in New Delhi, from a supplier in Jharkhand, the transaction details of you should be matching with the transaction details of the supplier. See, when you are purchasing inputs, you are paying input tax. This data you will upload. This should match with the supply details entered by the supplier who may be sitting in Jharkhand or Maharashtra or any other part of the country. So that means there is matching of invoices, matching of transactions, matching of returns, and matching of figures. For that, there should be a sync of the dealings, sync of the entries that we are making across the country. For example, if you are supplying from a party from here to Delhi, the data that you are inputting, giving to the system should match with the purchase details of the party in that state. So how this synchronization can be ensured? This is really a tricky issue. In fact, nationwide networking of a taxation system is a very, very tricky issue. Because digitalization of the transactions at the national level of huge size, geographical coverage, and huge number of billions of population, millions of dealers is a really hectic affair. So we constituted a national network, and that national network is called GST network, GSTN. There's a net setup for electronic handling of GST system. Each and everything in GST, right from registration of the dealers. Registration means as part of all means registration. You have amendment of registration, cancellation registration, then complying with the registration related conditions or payment of taxes, monthly, regularly filing of your returns, entry of vouchers, everything, each and every minute aspect of it, payment of penalties, interest, all are through this GSTN portal. Nothing you do physically or manually, everything online. And also for the government, the tax department, they need some good number of backend services, sharing the revenue among states. The share of GST, IGST goes, share of SGST goes credited to state governments. And again, data analysis, research on GST, like the good number of backend services are needed for government. They are all facilitated by GST network. So they are managing the common portal. We have all India common portal called www.gst.gov.in managed by GSTN. And that's for GST department, which connects the taxpayers and governments. They are providing ICT infrastructure, information communication technology infrastructure for GST system. Initially, it's again GK part. Initially, it was founded on 2013 March 28 as a private limited company. Okay, private limited company. Authorized capital rupees 10 crores. Ownership was 49% with the government and 51% with the private parties, means financial institutions. Their central government and state government had equal share. But later what happened is the data that this network is covering is huge and maybe very crucial. Government thought to make it a fully government-owned company. In 2018, Senate government decided to convert the GST into fully owned government company. Now it is remaining with the government. Private parties are not having any role in it. It's a non-for-profit company. We call it a Section 25 company as per the Companies Act review. Okay. Some technical issues. Yes. Now, another constituent of GST is GST Suvidha providers. I'll tell you what these are. I told you, unlike the past, where a dealer who is selling something, or a dealer who is manufacturing something, or a dealer who is rendering a service, he was dealing physical form. He may be having a set of documents, papers in the file. He may be having a computer, his own software, his own Excel sheet, spreadsheet, through which he is managing all the details. And he may be submitting printouts or the manual paper to tax department. But what happens in GST is and everything through online portal, GST portal. Then the data needed is in the way in which GST portal will accept it. I repeat, it's not the way in which you have this data in the paper or file or however form you have. Rather, it should be submitted to the GST department in the way in which they are accepting it. There is a unique style of entering data, which is unique to the GST portal. And the data must be the voucher entry, the return data, the payment of tax, or the filing of returns. Everything should be done in the format demanded by the GST portal. It's not the way in which you have been maintaining it so far. Prior to 2007, you may be having your own ERP, Enterprise Resource Planning, your own software, your own package, etc. But that will not or may not work with the new GST system. So what happened over a period or with the GST implementation is we need a set of players called the GST Suvidha provider, GSPs, who are making softwares to ensure that the existing software or existing data of the suppliers or dealers are matching or able to enter or upload or submit to GST portal. So these fellows are developing web applications, maybe app or maybe a software or maybe through the websites, which can be accessed, which can access the website or GST network. So they are linking, these GST Suvidha providers are linking between government, GST department and the taxpayers with their software. Okay, that means they are interplaying between, intermediate between taxpayer and GST portal. Okay, earlier I told you GST portal is intermediate between taxpayer and the government department. Now between GST portal and taxpayer, we need a software support from GST Suvidha provider, GSPs. Look at some of the salient aspects of them. So they're helping the taxpayer to comply with the GST laws. The GST law is involving set of provisions, just like any other tax law involving set of provisions. Regularly submitting of returns, payment of taxes in time, updating details, making changes into the registration particulars, amendment, many things are there. So these are all through a web platform is facilitated by GSPs. So GSPs develop the web applications, which can work in a laptop or mobile phone, just like an app, or their own softwares are there, websites are there, like that, to interact or deal with the GST portal. Then they are basically helping for legal compliances, invoicing, submission returns, etc. Okay, so software is provided by GSP for GSP's web portal, mobile format, accounting package, ERP, etc. Okay. Now, listen, only GSTN approved institution can become a GSP. GST means GST Suvidha provider. That does not mean that they are independent institutions. Anyone can become that. It's not, they are independent institutions, no doubt on that, but not everyone can become a GSP. Not every institution or firm can become a GSP. Not every software developer can become a GSP. What will happen if everyone is permitted to become a GST? If they are making their own, crooked methods or techniques, that will significantly affect the way in which the tax system is being administered. So the GSTN has set some conditions. The financial strength, minimum paid up capital should be rupees 2 crore to act as a GSP. With an average turnover of minimum rupees 5 crore in the past 3 financial years. There should be technical capabilities for acting that. If these conditions are satisfied, then you can apply to register as a GSP. And your credentials are okay, you will be allowed to serve as a GSP for the system. So at present, the CAMS, the Computer Aided Managed Services, Private Limited, CARVI, TCS, etc., are approved GSPs in India. Okay. Now, some other constituents, sub-constituents, GST Suvidha Kendra. Actually, they are local level institutions supporting some small and medium enterprises for filing GST returns. They are there in the nook and corner of the cities and even rural areas and all that. Then tax return prepare. This is actually a source of employment for students. Remember, my dear student listeners of the program, GST is offering plenty of career opportunities after your undergraduate or post-graduation, especially if you have expertise or skill in finance, taxation, you can definitely become TRPs. That is there already in the income tax, but GST indirect tax is across the country and across the nook and corner is there. TRP is a fine opportunity for any interested candidate. You can get training. There are training institutions, and you can support firms who are bound to comply with the tax laws. You can file the returns. You can do all the services for them. I should have a little skill in taxation. Then only you will be a right candidate for that. Then help desks are there at the department level. They are providing help desk to clarify the doubts and provide information. Then GST facilitation center, they are appointed, approved by GSTs. Okay, operating at a local areas. Okay. Now, having understood the major constituents, the tax rates, the structure, etc. Now let us start understanding some other issues, some other features of GST. Look at how GST is unique. How GST is something so interesting as an indirect tax system. There are a good number of features. From here onwards, for the next 3 to 4 slides, I will be taking you through the different facets of GST, which are helping to understand how the system is operating. Now, the very basic level interesting point about GST is that the taxable event is supply. What is taxable event? Taxable event means the event occurrence of which leads to taxation. When you are liable to pay tax. For example, I told you in the excise law, production or manufacturing of excisable goods was the taxable event. At that time, you are bound to pay tax to government. In the case of sale, when you sell it, you are bound to pay tax. In the case of customs, when it crosses the border, customs frontier of the country, you are bound to pay customs duty to government. Let's go taxable event. Here, what was the problem with the earlier tax regime? Good number of taxable events: production, sale, provisional service, purchase, etc., etc., etc. Now all are gone. Now only supply is the only taxable event. When it happens, you are bound to pay GST to government. Later I will tell you what is the supply. Supply has got a separate chapter and a detailed explanation as to what is supply and what is not supply, etc. I will quickly take some of them if time permits. And another point is it applies to all stages of value chain. Remember, very interestingly, earlier under the say excise duty you are paying. Okay, so you are purchasing excisable goods. You are paying excise duty, the supplier of raw material. Remember. Take our example, the car manufacturer. Car manufacturer had purchased iron ore or steel. Steel is excisable. Supplier of steel is bound to pay excise duty, so definitely steel is excisable. The car manufacturer would have paid excise duty on the raw material. I repeat, the car seller or the car manufacturer would have used steel for car making, for car manufacturing. While purchasing the steel, the car maker would have paid excise duty. But that excise duty cannot be set off or adjusted or deducted as an input tax against the VAT. I repeat, the excise duty that you pay on the raw material cannot be adjusted or deducted against the VAT that you are bound to pay when you sell car. Means between two categories, excise duty and VAT, there is no inter-category set-off. You pay VAT, you can set off only what is with the VAT. You pay excise duty, you can set off only what is with the excise duty. Between VAT and excise duty, the VAT duty you paid on raw material cannot be set off or deducted from the VAT duty you have to pay or VAT duty payable to government. Though both are used for the same product. See, the excise duty you pay for the raw material of the car, VAT you pay for the sale of car. See, though both are used for the same product, same commodity, the raw material tax, the tax on the raw materials cannot be set off. The inter-category set off was not there. But GST removes that problem. See, whether you purchase raw material, whatever, X and Y, where you purchase components, inputs, sell something, all are treated supply. And since all are treated supply and no other different taxes in India on the manufacturing or rendering a service, whatever you pay in the form of tax for the inputs, that you can deduct. So that means it applies to all stages of supply chain, recognize the importance of all stakeholders in trade and industry. Another one is destination-based. I told you this point. SGST is payable to the state or the consumer. That's why when we welcome, Kerala welcome the launching of GST, because we are basically a consumer state. We are users more than manufacturers. State to which supply takes place. Another beauty of GST is the goods and services classification is as per internationally accepted codes. See, I told you with the launch of or with the introducing of globalization and all, we are a global citizens. Whether you are a company or any entity, you are going global. Similarly, global companies are coming to India. Definitely, they will be looking for global standards to operate in India. And only if they will come and make FDI in foreign direct investment or foreign investment in India. The destination should be investor friendly. The platform should be, maintaining global standards. So definitely, we also have to have that global standard in each and every parameters. One interesting category in that area is how the goods and services are classified for accounting taxation purpose. So goods are classified using HSN code, Harmonized System of Nomenclature. It's an international code developed by World Customs Organization. It is internationally applicable with effect from 1988. Okay, came into force in 1988, internationally applicable. It's a 6-digit code, but in India we use 8-digit code. To that 6-digit, we are added 2 more in order to emphasize specific items, in order to better classification. In these 8 digits, the first 2 are main chapter, main segregation of the item, then subsegregation. This is specifically what the item is. That is how these 8 digits are. For example, 62139090 may be indicating handkerchief made from silk or waste from silk. Example only. Similarly, SAC, Service Accounting Code. The services are indicated. Each and every service is indicated by 6-digit. 997120. This is an example for SAC for investment banking services. 99 is a common code for all services. 71 sub and 20 specific. Like that, they are maintained. This I already told you that Compensation Act 2017 was passed as part of GST implementation, under which compensation is eligible by the state governments for the loss in tax revenue due to the implementation of GST. In fact, I told you almost more than 10 years the governments took struggle to implement GST. One main reason why that much of agitation faced was due to the fear of revenue loss on account of GST implementation, particularly from the manufacturing states. Okay, so the government told that, okay, don't worry about the revenue loss on account of that. Don't worry. See, earlier VAT was imposed by state government. Now the state governments are told that no, you cannot levy VAT, you cannot levy sales tax. It is the GST Council which is deciding, and that tax, the GST only can be levied. Definitely, states will suffer. States will have a fear, in fact, because individually they are one state is one, but central government means having the 1/3 of the single voting power of the total. So manufacturing states agitated. So what they told, no, don't worry about the problem that you may face on account of revenue. We will compensate for the next 5 years. Some issues are emerging about this compensation. I'll tell you later. Then refund. Another interesting part of is mostly for exports. I told you when you are exporting goods to a foreign country, no GST is levied. But the input tax already paid on the raw material that you had used for manufacturing that is there. That will be given as a refund. Okay, not only export, some other case also you'll get a refund when the tax output tax is less than input tax is more, you'll get a refund. And you do say filing online. No need to knock the door of the tax official for some other reasons for getting this refund. Okay, you apply online along with regular returns. Up to 90% personal refund is given instantly, and that again given to bank account, not your pocket. Okay, not given in cash. It's again to bank account, fully digitalized and networked arrangement. Granted with 16 days or pay interest. Okay, if there is just like income tax, if the refund is delayed, you'll get interest. For delayed payment at 18% per annum, for deliberate error 24% per annum. How beautiful the situation is. So definitely it's a highly sophisticated style of taxation. Now look at some other part of GST. Composite tax is a very, very important area. I'll tell you what is the logic of composite tax. Listen carefully. See, there are different types of businesses in terms of their turnover, right? Turnover. Some are working with several crores, even in billions. Some are working with lesser figures. Right? GST, I told you, no, it's a very exhaustive tax law with a lot of compliances. Regular submitting of returns, maintaining of records, maintaining of invoices, collecting of taxes, remitting to government in time, and if there is any and maintaining registration live, so good number of conditions are there. If any violation in any of these will be penalized. And the later part of the tax law, which is not included in the presentation because of time shortage, you have the audit, assessment, inspection, search, seizure, arrest, etc. there. So definitely the comply with the tax laws like GST is really really a hectic matter. Suppose you are a small dealer, means turnover up to rupees 1.5 crore, 1.5 crore. You need not compute tax liability transaction wise, entry wise. Just you pay 1% of your turnover if it's a small scale business. Or if it's a hotel, 5% of turnover as GST. That's enough. No need of any item wise transaction details to be uploaded to department. If more than one registered person, the same PAN, turnover of all these entities will be taken together. So that means suppose your turnover is up to 1.5 crore, you can choose, request composition tax scheme to department. If department is satisfied with your request, they will allow, okay, you choose composition tax scheme. Once you are a composition taxpayer, you are with a special category. You have got lot of privileges, lot of specialities. What are the specialities? You cannot issue tax invoice because you are not allowed to collect tax from customer. A composition taxpayer is not allowed to tax from customer. You cannot claim ITC, input tax credit is not eligible on the GST paid to your supplier. Okay. Buyer from the composition tax dealer cannot claim ITC. Very, very important. And again, what you have to do, suppose you are choosing composite tax scheme because of your turnover up to 1.5 crore during the financial year, you file quarterly summarized return, no question of monthly and all. Monthly filing is a hectic matter. Only quarterly summarized return you need to file in GSTR 4, annual return in GSTR 9A. That's all. No need of detailed records. In invoice, you have to mention, no tax invoice, your other invoice, you have to mention composite tax person not eligible to collect tax on supplies. In notice, signboard, etc., you show that you are a composite taxpayer. You cannot opt this one, this composite tax, if you are liable to pay tax under reverse charge mechanism. I will tell you later what is the reverse charge mechanism. So once you are bound by reverse charge mechanism, you cannot opt the composition scheme. Similarly, composition scheme cannot be opted by some other categories: casual taxable person, non-resident taxable person, electronic commerce operator. You know all these things. I mean, casual means not regularly doing business and occasionally at times they are doing. Non-resident means they are not basically operated in India, but coming and doing business and leaving. Electronic commerce operator means like Amazon, Flipkart, etc., who are through somebody else. Okay, they are acting as an intermediary. They are collecting somebody's goods and or they are getting the order from consumer online and these orders are delivered to their suppliers or sellers. Both are registered with Amazon or Flipkart, like kind of e-commerce operators. Then interstate dealer, then manufacturer notified goods. These fellows cannot opt the composition scheme. And suppose you wrongly told that, okay, I am having turnover only up to 1.5 crore, but actually it is wrong. Then if department finds it out, you will be penalized. You have to pay normal tax and penalty. And collected tax, again, this composition tax also shared between state and center. CGST portion and SGST portion divided equally and given to state and center. And suppose you are withdrawing this composition tax scheme, you intimate the department, GST department in CMP 004, then within 7 days of this occurrence. Suppose on the financial year, on the next day, your turnover crosses 1.5 crore. Within 7 days of that, you convey department that yes, I am no more eligible for composition scheme. Please allow me to opt out. Now, this reverse charge mechanism, I will tell you what is that. It's a very tricky thing, I will tell you. So far, I told you the supplier is collecting tax, right? So, for example, I am a car seller, right? I am a car seller. I am selling car to A. I am selling car, say for example, I am selling car to A Limited. A Limited is a distributor or wholesaler or any customer, whoever. So who is paying GST? I am collecting it from the customer and I am paying to government. Remember, GST is paid by the seller, means the supplier. The supplier is collecting this GST from the recipient of goods, means who receives the goods. And recipient is giving to supplier, supplier is giving to government department. That is how normally GST is working. So that means you look from the angle of recipient. This recipient is doing what? His recipient is receiving goods from me. Okay, and recipient is giving tax to the supplier, and supplier is giving tax to government. But suppose you are collecting these goods from a unregistered person, means I am collecting tax from consumer because I am a registered person. Only a registered person can collect tax. Registered person means a person who is registered under GST law. A dealer who is registered under GST law only can collect GST from consumers. Very unfortunately, you may be seeing several hotels, restaurants, ordinary local restaurants in town and all will be giving a bill with a GST 20%. They may not be even knowing what GST is. They may not be even registered with the GST. Still, they will collect it and tell customer that, oh, look, GST is charged. Actually, unregistered persons are not allowed to collect GST from consumers. Only GST registered person can collect it. And this collected GST should be given to government. So government is getting GST from the supplier. That is the point. But suppose this item is purchased, supplied by unregistered person. An unregistered person is supplying it. Then what you have to do? Not the supplier, but the recipient is liable to pay GST to the government. I repeat, normally the supplier is paying GST to government. But if the supplier by an unregistered person to a registered person, then the recipient of goods is bound to pay tax to government, GST to government. I'll give a simple example. Say, for example, a farmer. A farmer is selling 5 crore worth product, maybe rubber for a car manufacturing company, tire manufacturing company, any raw material. A farmer is supplying 5 crore or 1 crore worth raw material to a car manufacturing company. This farmer, being dealing in agricultural items, is not liable to get registered. Then he is an unregistered person. But contract worth rupees 1 crore, big amount. Then farmer is not registered, so he cannot collect GST from me. He will not be paying GST to government, that farmer unregistered person. In that case, I am bound to pay GST to government. And this payment of GST is called payment under reverse charge mechanism. And this payment is called reverse charge. So what is reverse charge? The payment of GST by an unregistered payment of GST by the recipient Payment of GST by the recipient of goods or service. When it is applicable, when the supply is between a unregistered person and a registered person. When unregistered person is supplying goods to a registered person, it is not the unregistered person who is bound to pay tax to government, but the registered person should himself pay tax to government. Examples: import. Say you are importing from a foreign country. You are importing from a foreign. You are a limited. You are importing from a foreign country. Government does not know who is that importer in that foreign country, but government knows you, the person in India. You are the recipient of that goods. Then you should pay GST to government. Agriculture is. And very interestingly, normally the provisions are applicable on the supplier, right? Supplier is bound by all the rules and regulations. They are the dealers, they are the registered persons. But in the case of reverse charge mechanism, all the provisions of the law applicable to the recipient of goods, as if he is liable to pay tax to government. Yeah, this is recipient can also claim IT's input tax credit later. Okay, that is another beauty of law. Well, I hope you understood that. Then another special in a provision of GST is with regard to e-way bill. This is another frequently coming in media and all that. Suppose you are, transporting goods from one place to another state-wise, we have about rupees 50 crore. You have to have a document. Earlier, there were check posts. Say, for example, you are having a load, some goods you are transporting from Kerala to Karnataka. What you will do, since it is crossing the state, you will go to the check post. Check post officials will examine your load and will fix the tax, and it will be taken, paid to the government. That is how you are allowed to cross the state. You know what is the status of check post. Several movies even portrayed how check posts are working. Several issues are there. Means long queues, vehicles waiting. So logistic cost will increase, transportation time will increase, the bribery, the foul play taking place in check posts. Even there are several media reports saying that the Customs Commissioner caught red-handed the person who was collecting some bribes for getting relaxation of tax. So those issues, the check posts are abolished. No more check posts is needed under the GST system. Even if you want to cross one state to another, you online register your transportation, the load that you are having, the value that you are having, the kilometer you are traveling. Register it, download, get the printout if necessary, otherwise keep in the mobile phone. If at any point, if the tax officials are stopping you and asking what is the details of your transportation, the goods that you are transporting, you show this e-way bill. That bill is called e-way bill, the electronic electronic registration that you have made. That's enough. No need to wait in front of any check post for transporting your goods from one place to another. You cannot stop the vehicle for more than 30 minutes. Immediately you can see the proof, you can skip. So if it's compulsory, if it is crossing value of goods that you're transporting crossing 50,000, optional if it is lesser than that. Okay, so that means manual electronically filing the details of the goods that you're transporting from one place to another, state to interstate or like that when you transport. So it's very simple. Validity is from 1 day to 10 days for 100 to 1,000 kilometers. Now, another very interesting part of this GST is electronic cash ledger and electronic credit ledger. I told you in GST, everything is electronically managed. Everything. Cash coming in, cash going out, everything electronic managed. So definitely some ledgers are needed. That too again electronic. Look at the electronic credit ledger, how it operates. You are crediting, as commerce people, debiting and crediting are the two interesting entries in or parts in any account. So here in the ledger, you credit to the input tax credit, debit the output tax liability. So whatever ITC you are eligible for will be credited to this account. Whatever output tax liability will be debited to this account. Net amount, if it is excess credit, you will get as refund. Net is liability, you have to pay to department. That's it. Over. No other transaction will appear in the electronic credit ledger. It is debit or creditor automatically. You need not do any debit and credit. You just enter your transaction details. You just enter the purchases, the input tax already paid. You just enter the supply that you have made. Automatically, the credit and debit will come there. That's how it's operated. Then electronic cash ledger is just like a bank account. For facilitating payment of tax, fee, fine, penalty, etc. Just like a bank account. You deposit money, you withdraw money, whatever is there, you can utilize. And from this ledger, you can may pay your tax liability to the government like that. You can withdraw the balance. If there is any balance, you can withdraw also. Then some other additional issues, assessment and audit. Just like our ordinary, VAT value-added tax system or excise law, you are bound for a self-assessment of tax. Just like your income tax, you are assessing your tax liability at the regular intervals. So provision for assessment of non-filers, unregistered person, summary assessment, all normal provisions are applicable here also. Best judgment assessment is there, normal scrutiny assessment is there. So provision for provisional assessment on request of taxable person. Audit is to be conducted at the place of business or taxable person or at the office of tax authorities after prior intimation. And audit is to be completed within 6 months, extended by further period of 6 months. Like that, all normal provisions are applicable for GST also. Okay. Now look at the overall GST structure, who are all there in the constituent. Some of them I already explained in detail. So taxpayers are there, facilitation centers are there, help desk, GST network, AG, Accountant General, the auditor of the government, council is there, Reserve Bank is there. Reserve Bank is actually monitoring and facilitating money flows between banks, etc., etc. Then banks are there. Income tax department is playing a role because you have to have a PAN number or TAN number to register with GST. Okay. So definitely, this PAN is verified with the database maintained by CBDT, Central Board for Direct Taxes. So they are playing an active role. Then you have Aadhaar. Aadhaar is needed for registering. So your Aadhaar details is verified with the UIDA, the depository of the Aadhaar particulars. For that, you are bound to have e-KYC permission. So you will be verified whether you are a genuine person or not. Okay. So like that. Since it is already 12, I'm not going to much into the specific topics. Okay. Registration. I'll quickly tell you, still good number of students are there. These are the specific topics I thought to introduce. I'll tell you some of them considering their significance. See the question, who should get registered under GST law? Who should get registered under GST law? That's the first question. The law says that registration is compulsory for suppliers based on turnover. If your aggregate turnover in a financial exceeds rupees 40 lakhs, if your aggregate turnover is exceeding rupees 40 lakhs, you must got registered under section 22, subsection 1. In special category states, northeastern states are there it is 20 lakhs. If 20 lakhs is exceeded, you must get registered. That is based on turnover. Second category, 3 groups are there, 3 persons are there. One is a person already registered or licensed under earlier VAT. Then you must get registered under GST also. If you are registered already under VAT, you must get registered under GST also. Transfer your business. Suppose you are transferring your business from one person to another as a going concern, continuing entity. Then you, the new person who is accepting or purchasing it also should register under GST. Transfer of the business, transfer due to amalgamation or demerger, the new company should get registered. Then some other categories. Look at some other categories. Irrespective of the turnover, these categories should get registered. I'm not explaining too much. Person making interstate taxable supply. See, that means even at 10,000 rupees you are supplying interstate, though it is not crossing your 40 lakh, you must get registered. Cash or taxable person, person liable for reverse charge, non-resident taxable person liable for TDS, that I'll tell you later, input service distributors, etc., etc. These are all, some of the categories. And very interestingly, in these cases, you are compulsorily required to register. But the law allows voluntary registration also. What is voluntary registration? Even though you are not bound to register as per the requirements of the law, still you can register at your own choice. That is voluntary registration. Need not register. If you are engaged exclusively in goods or service not liable to tax. Only if you are dealing with the goods which are liable to GST, need to register. If it is wholly exempted or not liable to tax, no need to register. Agriculturists, no need to register. Other notified persons. Then procedure. I'll quickly convey you the requirement. When to register? Once you are liable to register, means when you are dealing in the state, when you are becoming e-commerce operator, etc., apply for registration within 30 days. In the case of casual taxable person or non-resident taxable person, apply within 5 days prior to start of business. Means you are not a continuing person, you are only for a particular season or particular time, particular period. Then you, prior to doing that, you register. You have to have a separate registration for each state, union territory, each business verticals or business segment. Separate registration here for your unit in special economic zone or special association or developer. That means if you are operating your one business in SEZ area, special economic zone area, other business in non-special economic zone area, you must have registration, two registration. That's the point. Each registration is treated as a distinct person and distinct establishment. Then how you can register? For that, you first of all, you have a PAN or TAN. TAN means tax deduction and collection account number. PAN means permanent account number. You should have an email, valid email, and a mobile number. All transactions are through email. Unlike earlier systems where you are knocking the door of office of tax department for getting registration, here everything online. No need to go to the office of the department for registration. Online. How you are taking the form number GST REG1. Directly you enter or you go to a facilitation center, they will help you. In part A, you declare your PAN, mobile, email. That will be verified. Your PAN will be verified from Central Board of Direct Tax database, mobile number from OTP to your phone, email by OTP to ID. That OTP you have to enter to site. Then it will be ensured that, okay, you are the person who are actually trying to register. Once these are verified, you will get a number called the temporary reference number, TRN. That will be conveyed through mobile phone and email. Using this TRN, you submit the part B, next part of registration form. There you have to sign, you verify your details, you have to submit necessary documents and get the e-acknowledgement. You have to get the e-acknowledgement. Okay, fine. Now, this application that you have submitted will go to the proper officer, the officer in charge of registration section. He will examine it. Remember, he grants registration within 3 working days. See how efficiency is improved with regard to registration side of GST. Earlier, there were cases where to start a business in India or in a state, you have to have long days for getting registration, tax registration. Here it is simplified to 3 working days. And very interestingly, when you are applying for registration, there may be some errors, some mistakes, etc., defects. Then definitely they will issue notice. That defect notice should be issued within 3 working days in the form GST REG 03. And for that you have to clarify. Suppose no notice came within 3 working days, then you are deemed as registered. You are treated as registered. No issue at all. No need to wait any confirmation and all that. You will get the registration certificate by email. No need to wait for their confirmation. That will come automatically. So within 3 days, either the department should issue a notice of defect or clarification, or issue registration certificate. That's the only way. Registration certificate will come only later, but that 3 days is there. Then if they are asking clarification or information for the documents in GST REG 04, you have to give within 7 working days. In that, you may modify correct application except your PAN, mobile, email details. And then after submitting these, they will examine. The proper office is satisfied with your clarification, they will grant registration within 7 working days. So first was 3 working days. Now, if it is clarification is sought within 7 working days, that registration will be granted. If no reply to notice or not satisfied with the clarification, they will reject and inform by email. That is how they are working. That is how they are working. Okay. Now this is the registration certificate. Quickly I will take you through. Almost 15 numbers there. First 2 state code, the next PAN number, entity code, black and digital check digit is there. So this is how a registration certificate will be available for a registered dealer. Okay, these are all conveying the details, who you are. And this registration number should be displayed in all major places. Your invoice, your signboard, your letterhead, etc., etc. You have to register. Look at an invoice. This is a GST invoice where you are showing all the necessary particulars. Now this is deemed registration. What is that? If no action by proper officer within 3 working days of first application or within 7 days of clarification, it is deemed as registered. You are given all privileges. You can go ahead. If proper officer conveys registration number, he will give you the certificate. That's all. This I told you, suo motu registration by proper officer. See, you are not registering, since though you are liable for registration. But department is finding that you were bound to register but did not register. Then department has authority to do suo motu registration. What they do, they are examining your details, your status. Say, for example, they found that you are a non-resident taxable person or you are a interstate dealer, but you did not register. What will happen? Immediately they will take you they will do maybe based on a survey or incur your inspection first, etc. If they are finding that you are liable to register but unregistered, they will grant temporary registration and issue registration order. Within 90 days from that order, you must apply for registration. Okay, you can appeal against the order. If rejected within 30 days from the rejection, you have to apply for registration. Some other features, if you get registration under one law, it is getting registration under other laws also. If you are registering under CGST law, you are getting under SGST, UTGST. No separate registration application you need to file. That simplification is given. That's the point. Okay. Then amendment, I'm not going to see details into that. Amendment means if relevant particulars are changed, you convey to officer, proper officer, and you will get your registration details changed. Then cancellation. Cancellation means you got registration, but later you think that you are not eligible to get registration, or you don't want to be registered anymore. In such cases, you can cancel your registration. There are two types of cancellation. One is proper officer on his own motion cancelling your registration. Means he granted you registration earlier, but later proper officer department think that you are no more eligible for registration, then he will cancel your registration. Suo motu. Then you can, second case of cancellation is the registered person is applying for cancellation. That's the second case. Look at the first case. If you are contravening, violating the laws of department, GST, your registration will be cancelled. Don't think that, okay, once my registration is cancelled, I can do anything I want. I don't want to pay tax to government. I am so free. Not like that. If you are bound to register but violating the law, penal provisions will come thereafter. Okay, and also you won't be allowed to do transactions. And illegal transaction or transaction without valid registration, penal provisions will come just like that. GST though looks simple and interesting, penal provisions are also there. You are not giving returns 3 consecutive tax period. If a composite taxpayer of 6 months, then if you did not file return, your registration will be cancelled. Registration certificate obtained by fraud, willful misstatement, fact suppression. You submitted some data, but that was not of you. Somebody's data, somebody's fake data you given. If it is found out, your registration is gone. Dealer not conducting business from the declared place. You have to declare where from you are operating, which are the places of operation, place of business. If that is not the actual place you are operating with, your registration will be cancelled. You are violating act and rules, then they will issue a notice. Okay. Once they find it out, they will issue notice. Within 7 days, you have to give reason why not your registration be cancelled. If your reply is satisfactory, the cancellation will be dropped. Otherwise, they will proceed with. This is a cancellation on the initiation of office department. Suo motu, you can apply for cancellation. What is that? You are continuing doing a business, but thereafter you are discontinuing it, stopping it, or you are fully transferring your business to somebody else, or business constitution change. Your partnership is changing to a different level or different status. You are no longer liable to be registered. Means you are no longer dealing with taxable goods, though you were doing in the past. Then you can apply for cancellation or registration, because once you are a registered person, you are do the remaining activities or the remaining compliance also, like filing of return, etc., etc. For avoiding that, better you go apply for cancellation of your registration. Within 30 days of not requirement, you have to apply. Before cancellation, you may be given an opportunity for hearing, and even if cancelled till date, you have to pay tax. And if cancelled under one law, it is cancelled under other laws also. Okay. You can claim input tax credit if it is belonging to the eligibility period. Okay. My teacher, time is over.
Okay, it's 12:25.
Up to what time?
Sir, as you wish.
Okay. I will quickly summarize.
Okay, sir.
Okay, fine. So input tax credit, this I already told you, so I'm not taking again. So let me supply. I told you what is supply. Simply, I will tell you what is supply. Supply basically means all types of transactions like sale, transfer, barter, exchange, license, rental, lease, disposal, all are treated as supply, all forms of transactions. Maybe for consideration or without consideration, all are treated as supply. This is a detailed definition. I'm not going for because of shortage of time. Now, I'll tell you two interesting points about supplies. Two types of supplies. One is composite supply, second is mixed supply. What is composite supply? I'll tell you. For example, suppose you are contacting your DTH cable, DTH operator. What he will do? He will give you a DTH a connection, a set-top box, and some warranty or service, service for a period, warranty, and some packing materials, sometimes insurance, etc. These are given together. Okay, these are given together. These are supplied together to you by the DTH provider. They cannot be given isolated or independent. For example, suppose you want a cable TV connection or DTH connection in your house, you cannot ask only for set-top box because you need set-top box plus DTH connection. You need supporting materials, without which you cannot use your DTH connectivity. So that means those items are able to sell only together. They are naturally bundled as part of ordinary business, without which you cannot have that deal, without which you cannot have that service, without which you cannot enjoy that product. So those supplies are called composite supply. So composite supply means supplying more than one item together, but as part of normal business. So supply of two or more goods or service or both together. They are naturally bundled part of ordinary business. And among them, one item will be treated as principal supply. Principal supply, main supply. The tax rate applicable for the principal supply will be the tax rate applicable for the whole items. For example, suppose in this example, DTH is taxed at 10%, set-top box is taxed at say 5%, repair service is taxed at 20%. Here the main service is DTH connection. So, and assume the prices are some say 1,000 rupees, 500 rupees, 10,000 rupees, etc. Altogether comes 11,500 rupees. This entire 11,500 rupees will be taxed at the rate of GST applicable for the principal supply. Here in this case, DTH means at the 10% entire supply will be taxed. Entire invoice of 11,500 will be taxed. Though tax rate of repair service is 20%, that 20% is not applicable. Only the principal supplies, the GST rate is only applicable for the whole supply, whole invoice. This is called a composite supply. So supply of two or more goods or service or both, which are naturally bundled as part of normal business. But mixed supply means it's like if you go to say household items like National Grid Electronics, the shopman is telling you that you take this fridge. Say if you take this fridge costs rupees 20,000. You take this TV, your TV costs rupees 50,000. You take this washing machine that costs rupees 20,000. If you take these are the combo offer, we will give you price discount or we will give you special concessions or special gift and etc. What is the intention of the seller? Seller is trying to sell the three things together. Having got a customer, they are trying to sell maximum. That's a normal business practice. Almost all the segments we can see that. But they could have sold differently, independently. You could have purchased TV from one shop, fridge from another shop, washing machine from another shop. Still, just for the marketing practice or business practice, they are selling together. Single invoice they are issuing for all this. That is not a normal practice. That is not a genuine practice. Why? Because maybe fridge is taxed at taxed at the rate of say 10%. TV may be taxed at 20%. Then washing machine may be at 30%. You are clubbing together. Here supplying two or more goods or service both as a package. Each can supply separately. Then GST law says that among the items which has the highest rate, at that rate all the invoice will be taxed. In this case, three items are there. Total invoice price is 90,000, 20,000, 50,000, 20,000, total 90,000. Highest rate is 30%. At that 30%, entire 90,000 will be taxed. That is what is called mixed supply. So mixed supply is actually taxed at the highest rate of the group. That is what is mixed supply. Another example I given, the canned food, the sweets, the drinks for a single price, single invoice. But the highest of the rate will be used for the whole invoice. Zero rate supply, you already told. Exempt supply told. The exempt supply means no output tax, no ITC, even if paid on inputs to make it. Value supply, I'm not spending. Last two or three items. TDS. What is TDS? It's applicable for government departments, agencies. When the government department, etc., is receiving supply, and the total supply value exceeds rupees 2,50,000, then the government department is bound to deduct 2% as GST before making payment to supplier. This is called TDS. I repeat, suppose a government department, for example, our government college is purchasing computers worth rupees 3 lakh. This amount is exceeding 2,50,000 ceiling. In that case, suppose the amount to be paid is say 10 lakh, 3 lakh rupees you have to pay. You should not pay entire 3 lakh to supplier. From that 2% you deduct. After balance only pay to supplier. And this 2% deducted should be deposited to government as GST collected. And that collection is called a TDS. So these agencies or government departments are bound to deduct TDS. They must be registered also. All the government departments are receiving more than 2,50,000 invoice must get registered. Issue TDS certificate to the deductee within 5 days of deduction. And they have to file return within 10 days or the next month. Another one, TCS, tax collector source. And e-commerce, this is applicable for e-commerce operators. When they are receiving supply through their portal, say for example, say you are booking a book, you are booking a book or say any program, mobile phone, handsets. You are booking of Samsung, but you are purchasing through Flipkart or Amazon. Who is supplying the product? It is supplied by Amazon, but whose product it is? It is of Amazon, Samsung. Okay. In that case, the electronic commerce operator is receiving the price. Amazon is receiving the price. See, the transaction actually takes place like this. Samsung is registered having a business link with Amazon. You are registering with Amazon. Samsung is supplying goods to customer. You are paying to Amazon. Amazon is paying price to Samsung. Got it? Okay. The customer is paying price to Amazon. So Amazon, what it has to do before paying price to the Samsung, it must deduct 2% as GST. That is called tax collector at source. Okay. Then trends in this is research angle. Students may not be that interested in research. Anyway, I'll quickly summarize how maybe general listeners of this program may be interested in how GST has grown up or brought up in Kerala or national level. Look at how the GST has fared in India. Gross GST revenue collected as on 2020 November comes 1,04,063 crores. SGST is dominating. IGST is again at the top level. These are the figures. Just for the sake of numbers, I given this number. The data shows that there is high increase in the GST revenue collection. Yeah, there is increase. GST revenue for the November 2020, 1.4% higher than the previous year. So that means the trend is showing that GST collection is increasing. One. Okay, again, with regard to revenue from import of goods, 4.9% higher than the revenue that, and for revenue from domestic transaction, again, it is higher. So that means there is a positive trend in the, or increasing trend in the revenue collection from GST for India. This is the data. The data is being analyzed with the last year, financial year 2019-20 to 2021. This one is previous year. This one is current year. Earlier it was low, at lesser level, downer level, but it has gradually increased, and it is showing the Minister of Finance data showing that GST collection in India is at a increasing path. This is state-wise collection. The Maharashtra is having the highest GST collection in India. Between November 19 and November 20, they have got a decline in maybe due to COVID issues and all that, lockdown issues and all that. Anyway, they have a negative trend in the growth of GST. Gujarat is the first among the states in India between these two periods in terms of the growth of GST revenue. Again, they are the second most revenue earner of GST because they are basically industrial, states. They are having a large number of industrial units. Tamil Nadu is there with the third position. The growth rate having a second place among states in India. And Kerala is there at the 15th position with minus GST collection. We are having in the as on 2020 November 1,568 crore as our collection. That's again from Ministry of Finance, Government of India. These are the other states. Okay. And particularly since starting in 2017, the Kerala's SGST and the CGST collection, IGST collections are portrayed from a graph. Again, data is from the GST Department of Government of Kerala. IGST was at a lower level initially in 2017, but gradually picked up and increased at one level in 2020 April. SGST IGST was at a bottom level, and again it went up. That means IGST is dominating among the revenue collection for the government of Kerala. That is the trend that we are seeing in the revenue. And finally, three or four slides on evaluation, critical evaluation of GST in India. Basically, it's a one nation, one tax, one market concept. We are looking for unity or a unified tax regime. We actually amalgamated the central and state tax in a single tax. It avoided the tax cascading. It is fully digitalized and app-based. It's ensuring transparency in the tax system or tax world. One major issue that we are facing is the kind of bribes, corruptions, and so on. Often cases are reported, and at least they were there in dominance in the pre-GST regime. So now GST is, since it is minimum governance or maximum governance and minimum interference or human interference, it is purely improving the efficiency, transparency, accountability. It's very easy to administer. Unlike the earlier systems where papers and files were, what we call as red tapeism, it's all online, nothing to do by human beings. All, that's what I meant as minimum officer interference. And it actually avoids a check post. Check post once upon a time where the centers of corruption, I would say, from the newspaper reports and all that. Now it's easy to, even reports are saying that the logistics cost has reduced, and more number of kilometers can be traveled with the help of GST implementation. Then our products became competitive abroad. Foreign exchange reserves are showing only increasing trend in India. We are better able to comply with that. And look at one statistical data. Year-on-year consumer price index, the inflation level in 2016, that means prior to GST, it was over 6%. But by 2019, it is little over 2%. That means inflation has reduced. It's a positive sign for any economy. So that means GST is making some positive, impacts or positive changes in Indian economy. That's what we understand from the data and some research works. So let us criticize, at least for the next 5 or 10 minutes. Because no system in the world ever implemented or run without criticisms. Anything and everything can be criticized. I'm criticizing not to tell that, okay, GST is not needed, GST should be changed or removed. I'm saying because of the interest that GST should be improved, the system should be improved. Okay, criticisms primarily in the initial stage was, states were telling that how can we have a single tax for a country which is with plenty of diversities. Okay, across the country we are having diversities. So we call it as one India. It is 29 states. So how we can have a single tax system, tax rate? Say, for example, rubber is not an important product for Maharashtrian or Delhian people, Delhian dealers, but that's so important in Kerala. How can have a same rate of tax for rubber in here and there? Like that, state differences are there. That is not considered in GST. GST is considering national level picture. So state significance, state importance may be neglected. That is one issue. That was one major issue being pointed out by many of the states, in addition to revenue loss. States control laws individually. Earlier, see, actually, state is actually running the finance of its requirements, expenditures, etc. The main source of any state is tax revenue, but that's loss. Individually, they cannot levy a single tax. in the indirect tax area, then what can be the source of revenue for the government? So that's the issue being raised. Then this is from business side. Earlier you were saying that tax is say 2 rupees, 3 rupees. Now GST is there with a big figure. Interesting cartoons were there in the newspaper towards the introduction of GST, saying that in the restaurant bill, I took 5 rupees tea, that figure, etc., etc. Finally, you are saying a big figure as a GST amount. You are saying, I did not take this product, this item, this eatable. How can I? How this item came? I did not take this much of worth extra, food item. The problem is that GST is, since removing all others, the entire item, entire tax is clubbed into a single figure. So consumer may feel that, okay, I'm paid more, I'm taxed at a heavier rate. So high amount of tax is levied. But fortunately, unfortunately, when we had many other taxes, we are not knowing that. And unknowingly, we are paying. So we are not that worried about it. We are thinking that that is the price of the product, so we are paying for it. But now everything is reflected on the bill, which will make you dissatisfied. Another very significant issue is unregistered small dealers. I told you, an unregistered dealer cannot collect tax from the buyers or recipients. But they are still bound to pay GST on their purchases. The raw material they are purchasing, they are bound to pay GST. But that GST cannot be taken as credit when they are selling outputs. So that is the problem. So what will happen? Big companies will be able to get the credit of their ITC and they will be able to sell at a lower rate. But these non-registered persons will be still bound to sell at a higher rate because they are not getting any credit of their ITC. So that is another criticism. Then technology-related problems. See, GST is fully operating online, network, computer-based. How far our technology system, framework, infrastructure is sufficient enough for that is a big question. Do we have, connectivity? That will come later towards the challenges or the suggestions area. Then tax evasion. See, we thought that GST will be removing tax evasions taking place in the country. But the reports are saying altogether different story. Fake invoices, non-issuing of invoices, underreporting of sales, claiming false credit, wrong classification of goods. Because one item you classified in one category may be taxed at 18%, other category may be taxed only 5%. So you may better classify under second category so that you can reduce tax. So non-depositor tax collected. You are collecting tax from customers but not given to the government. What the government will do? Wrong rates are charged, telling that the detailed description of the goods, making it as a wrongly rate. Maybe when you are bound to pay at 18%, you are paying only the 5%. Look at the statistical data. In 2018-19 tax evasion cases were 20,000 crores. The government is losing 5 trillion. Look at the 15th Finance Commission, January 2020 report saying that government is losing 5 trillion in indirect tax revenue a year, equivalent to 2.4% of GDP or 40% of the tax GST collection target due to defaults and evasion. That means lot many things are to be done for improvement. Another issue is the delay in the payment of compensation time to states. In fact, recently even state like Kerala even thought of approaching Supreme Court for getting the compensation because it was not paid in time. Look at the statistical data. Shortfall of GST of 2.35 lakh crore. 2.35 lakh crore is their shortfall in GST revenue. But only 1.83 lakh, the latest report from the media, say only maybe given in this year. So Kerala expected 12,000 crore till January 2020, but only 5,700 crore giving out of the borrowing that government is going to make. Even the central government recently given two options. Either you borrow through a special window with the help of RBI, or you borrow at your own level from other agencies. In that case, you have to pay the interest. So nobody accepted any of these suggestions. Finally, Kerala thought to accept the first one. So some other issues. So final question is, what are the suggestions that you may give based on the research works that we are doing on it? One is to reduce the tax evasion. The government GST evasion worth 48,000 crore, 8,917 cases report. It is reported in Addis Ababa by the minister recently. So we have to find some better measures and procedural simplification, rationalization, streamlining, etc., for reducing tax evasion. Tax rates often criticized in even in many occasions. GST rates are very high for some items. Relaxation may be considered. Timely payment of compensation is another variable because states are mainly depending on the tax revenue for their requirement. And again, it is for 5 years only, means up to 2020, 2022, it will be over. But government still, may be looking for extension beyond 2022. Then improving the administrative efficiency. A department is set to, in my personal opinion, maybe improve their administrative efficiency so that they can take care of the system better. The digital connectivity is very, very important. I was telling that digital technological issues are there. Look at one statistical data given by TRAI, Telecom Authority of India, in October 2019. India 66% of population lives in villages, means the majority, more than 50% is there already, 66% in villages. But the rural internet density means in every 100 person, how many are having internet facility? Is only 25.3. Means the major chunk is not having internet, are not internet subscribers or users. Urban it is 97.9, that's better. But 66% of the population rural area means we have to think of. Then data security. I told you it's everything through online and network based. Whether this data is safe in this network is a big question. Look at the Economic Times report on October 2019. Over 6 million data records are lost or stolen every day worldwide as per the breach level index. With only 4% of the breaches protected by encryption. We have so many data protection measures, encryption, coding, etc., but only 4% are protected. The 6 million data are taken, lost, stolen, hacked. How a business can trust upon? It's a big question. So we have to ensure data security. That's what we can do. Thank you. Hello? Hello? Are you there?
Sir, thank you, sir. Thank you so much for giving us the extensive idea on what is GST. And I request all the students, if you have any queries, you can interact with the speaker, or you can post your queries in the chat box also. Those who are on the live stream, you can post your queries in the live chat box.
Let me get the queries if any. Then I will make a final conclusion. Okay.
Yes, sir.
I stop halfway because let me see whether somebody is asking any question. Then I will conclude the overall presentation. Teacher, am I presenting now? Yes or no?
Yes, sir. Yes, sir. You can present it, sir.
No. My question, whether I am presenting now, are you seeing my presentation screen now?
No, sir.
Okay, very good, very good. Okay, not necessary, not just asked only. If somebody is asking question, can ask. Otherwise, I will quickly summarize what I have done in the last 2 hours or so.
Yes, sir.
Yeah, exactly 12:48. We started at 10:48.
10:30, yeah, 10:40.
Okay,
Yeah.
I started at
Yes,
10:48. Okay.
okay.
Okay. Any question from anyone? Otherwise, I will summarize the overall presentation. Okay, may I summarize then?
Okay, sir, you can summarize.
Sir, excuse me, sir. There is a question posted in the live chat box in the YouTube channel.
Okay.
What is the present impact of GST on Indian economy? Is it positive or negative?
I told you with the data, it is positive because I had statistical data also. You may be remembering the data that across the, whether it is CGST, SGST, IGST, we have a growth in GST collection. So in terms of revenue collection, we have a increasing notes. And whether I am doubting whether the question is whether it is positive for the economy. If that is the question, we cannot ask whether it is positive for the economy or not. GST is an inevitable reform that we had to have. As far as the revenue collection is concerned, it is increasing. If the system is improved with all the measures and suggestions I listed and more, we can definitely make the use of it. Otherwise, it is having a positive, no doubt on that. Absolutely no doubt on that. Hope I answered the question.
So thank you, sir.
Any other question? Just watch. Somebody may be waiting for the first person to ask. Any other question is coming out? One more chat is there. What is that? Okay. Then shall I summarize?
Yes, sir.
Okay.
Yes, sir.
Once again, I thank Chinmay Arts and Science College, Kannur, for the invitation and the audience for your patient listening. It's almost 2 hours on a tax topic is really, wonderful from the audience. They are there with me. So I'm particularly thanks to the audience also for being with me. GST is a very interesting, subject to learn. As I told you, for the students particularly, it is providing a lot of career opportunities. So definitely you should look it with all positiveness. And even criticisms may be there, whether about any reform that we are having in the country or in any part of the world. What we can do is make it to the best of the time and occasion. Very interestingly, I was complaining that, or I was telling that tax evasion is a burning issue in GST also. Recently, what the GST department at the national did is, in the site they have opened a page in which we can report tax evasion cases. If you find somebody's evading tax, if you notice that, you can either call or email, or just in the web page you can submit your details. And it is particularly told that your details won't be disclosed. It will be kept confidential. So as responsible citizens, we can be with the government for ensuring that the taxes are paid and laws are complied within time. So GST is a very simple law, very, very simple law. The coming years and decades are of GST. Maybe facing a good number of changes. We just started only. It's not even a decade of implementation. Many changes will come definitely. So what we can do as learners of commerce and industry is learn understanding it. So the presentation that I had specific coverage and sequential completion of the topics. We started with understanding how was the pre-GST tax system that we had in India, and with all the constitutional provisions, permissions, etc. Then we examine how the GST is. As I told you, the system is taxation on the value addition that we are making. So GST is following a dual system, dual GST system, which is actually trying to make the whole supply chain into a networked and well synchronized chain. And then evolution, the historical part of it, then types of GST on different transactions, then features different constituent elements of GST, like GST Council, GST Network, GST Provider, GST Suvidha Provider, GST Kendra, and so many issues. Then specifically into the registration, input tax, rate, supply, valuation, etc. Valuation I did not tell because of the time shortage, TDS, TCS, etc. Then the research side, the GST collection, as I proved by the data, it is increasing. It is increasing, and the merits, as far as the critical evaluation is concerned, the issues are there with regard to the connectivity, data issue, etc. Anyway, India as such, we are looking for digital India. We are looking for makeup India. We are looking for a 5 trillion economy. Definitely, positives will come. So let us hope that the new system that we started in 2017 is taking our country, the economy, to greater heights and greater milestones. Once again, I thank the organizers, the coordinator, the college officials for the invitation, and also the audience. Thank you. Have a nice day. Stay safe. Stay healthy. Thank you. Okay, by the way, one question has come. Had you been given a chance to amend any of the features of GST, what would be? Actually, that question is not clear. Had you been given a chance amend any of the GST features? What would be that question? Any idea? Ramya teacher, can you
Sir, if you have an opportunity to amend any of the provisions of the GST, probably if you have the chance to amend constitution, make constitutional amendment, what will you do?
Okay, a good question. See, any tax law, any law, for that matter, whether tax or non-tax, any law is complied with in its full sense only when it is simplified. Anything complicated, we may have a tendency to skip over or bypass or sometimes altogether ignore. That you have a good number of examples. Even you may be remembering the income tax, corporate income tax rate in India since our independence and at the present level. We had 60-70%, now it is at its 25%. Why we reduce tax rate to so low level? That's even lesser than the individual income tax level. 30% is the rate at which an individual paying at the maximum ceiling, and but 25 only for the corporate. Why? Because corporates or the main stakeholders of the system will be tempted to avoid it or somehow escape from it when it is charged at a very high rate. It's a common, tendency. The same way, any tax law should be, to ensure that it is complied with, should be simplified. In that way, if you ask that question, I would say little more simplification can be done in terms of compliance. That is one thing. Simplification can be done in many aspects, many other areas, whether it is in the case of assessment and audit, or in the case of procedure with regard to filing of returns, etc., etc. Now, second thing, not only with the simplification. See, when I look at it as a bureaucrat or an administrator, my intention would be to collect maximum revenue out of this source. I told you the major chunk of revenue for the government is coming from indirect taxes. Now it is GST. So definitely, as a decision maker or administrator, I will be trying to change or at least improve the implementation side of the system from the officials level. Means the duties and responsibilities, the task, the way in which it is handled, administered, the operated at the officials level, tax officials level, need to be rationalized, need to be streamlined. Many of the procedures that were there in the older tax laws were continued, or even some are duplicating, some are repeating, some are like many issues are there actually. One report is saying that the administrators are not able to manage the even cost verify the credits or cost check the details, etc., etc. Some simplification, the bureaucratic simplification should be done at the officers level. That's the only way how you can implement the system well. That is second thing at officers level. Then third thing is that ensuring the technological safety. Definitely technological safety is very important. So we have to ensure that the data that are inputting to the system is remaining safe. So like that, plenty of measures. See, any system is competent for changes. No system ever in the world which is fully okay, fully pakka. So like this, plenty of changes can be done. Okay. Okay, any other question? Though I given final words, still somebody's asking a question, I may answer. So I will advise, I will recommend all of you to read my book on GST, which was published in the last month on GST, and a new book will come sooner on the same subject in a detailed manner. So I advise all of you to have a reading. Any other questions?
Thank you, sir.
Okay.
Thank you so much. Okay. Students, there is an attendance and feedback form posted in the chat box. So please get the details to receive your e-certificate. Let me now invite Ms. Ramya, Assistant Professor, PG Department of Commerce and Management, to propose the vote of thanks. Ramya, over to you.
Thank you, ma'am. Good afternoon, one and all. I take this opportunity to propose vote of thanks to those who have directly and indirectly contributed to this webinar. First and foremost, I extend my heartfelt gratitude to our respected principal, Dr. K.V. Surendran, sir. Thank you very much, sir, for presiding over the session and providing us with your enthusiastic support always.
Welcome, Ramya.
Thank you. I take this opportunity to express my sincere thanks to our resource person of the day, Dr. Sajendran, sir, for providing us with such an informative session on GST. This webinar has enlightened us with clear and broader knowledge of GST. Thank you very much, sir, for this informative session.
Thank you, Ramya teacher.
Okay. I would like to express my sincere thanks to Ms. Anita Haridas, Head of the Department of Computer Application, for hosting the program and providing us with all the necessary support. Thank you, ma'am. Wholeheartedly, I thank Ms. M.K. Remya, Head of our department, PG Department of Commerce and Management, for her sincere efforts in organizing all programs and also encouraging and supporting us. Thank you, ma'am. Finally, I would like to take this opportunity to place on order my hearty thanks to all my dear colleagues and participants, expecting the same support and cooperation in all our future programs. Thank you, one and all.
Okay, thank you. Thank you so much.
Thank you, Ramya. On behalf of Chinmaya Arts and Science College, I once again thank our resource person, Dr. Shachindran, Head, PG Department of Commerce, GPM College, Manjeshwaram. Thank you, sir. Thank you so much. And I thank all the participants for their cooperation.
Thank you, sir.
Okay.